I am not a financial advisor. I am just sharing my thoughts on potential trades for my own portfolio. Uh, so please do your own due diligence. Do not follow me. These are just ideas. All right, so now let's go to this is January. My December options. How did I do? So I got a few that are still ongoing for January, so I cannot say the real total right now. I can do real total so far. So far $1,887. That's the real total so far. If I close a few out by buying them out, then it's a little less. And the total so far is $2,145. That is the trades that I made and that are still pending. So that is not the real amount. That is just what I got up front. But the real total is this much. The 1,887 so far. Now let's go to January. I placed a couple of trades on January 2nd, totaling out to $835 so far for the month. Placed them on Hood and on SoFi. SoFi has earnings coming up at the end of the month, and I am playing the 25, 26, and 27 strike. I have the 25 over on the December side. So I have 25, 26, and 27. And Hood, I have a covered call. So I own 100 shares and I placed a cover call. So I bought it at around $113. That's my cost basis. And I placed the strike of 115 for January 30th, which I'm pretty sure it'll get called away. If it doesn't get called away, then I'll just do another cover call. But for that one, I received $545 just to wait to see if I get them called away, which is great. So a lot of things happened this month. This past weekend. So opening day, we might have a down day coming this week. Which is buying opportunities for certain stocks. But I got two plays here that I'm not going to say I'm going to do cover calls or cash secure puts on. I think I'm just going to straight out buy the shares and kind of day trade them for the day if the market tends to go down. So what I have here is SQQQ and SPXU. These are inverse to the QQQ and the SPY, the S&P 500. So what this means is if the stock goes down, then these two will go up. So SQQQ, if the QQQ index goes down, SQQQ goes up. So that is what I'm thinking of doing here. If the market opens and I see that it's starting to go down, I'll probably buy like 100 shares of SQQQ and SPXU. And then by the end of the day, I would have sold them for more money. I don't tend to do this all the time, but on a day like it could be tomorrow, that is something that you can do once in a while. You know, if you know that something's happened and you're pretty sure it's gonna take a hit, don't throw a bunch of money in, because what if it goes the other way around? But just take a look at the charts. If you see the news saying stocks are going down, that's probably your opportunity to get in on this and then sell it, because it can go down in early in the morning, and then in the afternoon you'll have a pop-up. So if you feel like you made a few bucks, don't get greedy and wait. Just sell it and take your gains. So that's for the SQQQ and the SPXU, same thing. So you're looking at the chart, you see that they're going down. Yeah, they're going down because the stock is actually going up. SPXU is going down because the S&P 500 is going up. So if the S&P 500 goes down, then SPXU will go up. So that's these two. Now, SoFi. Again, I got a couple of trades on SoFi. And if it happens to go down tomorrow too, just because of the turmoil that happened this past weekend, that's a buying opportunity. So I might not even do cash secure puts. I think I just might flat out buy SoFi at whatever price it is if it drops. If it's at 26 from the 27 point, if it's at close to 25, it doesn't matter. We have earnings coming up at the end of the month for SoFi, and they always beat the expectations of the market. So I'm thinking that they're gonna beat this time too. So that I'm gonna place a bet saying that they're gonna beat. So I'll buy them cheap and I'll ride the wave up, and then I'll sell cover calls at a higher strike price to get out. Or maybe I won't even get out. I'll just sell the cover call at a very high price that I make some money, but not enough that my shares get taken away. If they do get taken away, then that's a lot of money. But that's the play here. Lyft is a company that I started looking at now for like a longer term. So if something happens tomorrow, it might not really affect the way I do things for Lyft. Maybe I'll still do a cash secure put at a lower strike, even if the price drops tomorrow, and see what happens if I get the shares taken away. So let's see here at the charts for Lyft. I got the 1 month. Let's see the 3 month. So the 3 month, it looks like the low is around $18.78, somewhere around there. Oh, I think over here in December it was actually lower, just by a tad, like $18.48, somewhere around there. But the high is around $25 at the peak 3 months ago, and it's now trading at $19.85. So I'm thinking of placing a cash secure put here around the $19 range. Let's see here, 1 month out. Let's do 2 weeks out. See what it looks like. $19. All right, so the $19 strike will give you around $35. Not bad for 2 weeks. If you want to be a little more safe, you got the $18.50 for $20. And then if you get these shares assigned to you, then you sell the cover call and try to ride the wave up. I think eventually it'll hit the $20 mark. And if you hold it even longer, it might even go back to around the 25. They also have earnings, I believe, in February. And when I checked it out, they also beat the expected move, the expected earnings. So not by much, but they still beat it nonetheless. So if they have good earnings also in February, it might bring the price back around to the $25 range. So that's stock number 4, Lyft. Stock number 5, Hood. Well, what can I say? I'm very bullish on Hood. I use it for everything, and so do many other people. So like I said, I bought 100 shares at the dip at around 113, and it is now at 115. So it might get called away because it's a 30-day contract. But if we have a big dip tomorrow, just because of what happened over the weekend, I will probably buy another 100 shares at a lower price than what I paid before. So I paid around 113. If it drops to like 112, 110, 111, I'll buy another 100 shares and sell a cover call. And I think this time around, I might actually try to keep my shares. So I'll probably sell a cover call way past the price. Like, try to sell a strike for like, I don't know, let's check the charts. I was thinking 117, but let's see. If I do another 30 days out, we're 26 now. All right, so if I sell a cover call, I mean, prices change, but I can do like 117, 118, and it won't be $400. It'll be less because if the stock drops, the option chain drops too. So I'm assuming this might be like around low 200s, high 100s, like 180, 190, somewhere around there. And hopefully I get to keep these shares. If not, well, then I make the sale for 118 plus the premium. That's a win-win also. But that's Hood. That's what I'm thinking of doing. So tomorrow, gotta play it by ear, see what happens. If the news does do what I think it'll do to the markets, SQQQ, SPXU, buy a couple of shares and ride the wave a little bit and then get out. SoFi and Lyft. SoFi just buy 100 shares, sell a cover call. Lyft, I'll do a cash secure put. And Hood, I would buy 100 shares and sell a cover call. So that's me for this week. Thank you very much, and I'll see you all in the next one.